Hey traders, Raghee here. Welcome to Charts and Coffee, double espresso actually. Hope everyone's doing well. Welcome to FOMC Wednesday. It's usually a really interesting time to step back, take a look at general trends in inflation, jobs, growth. And then, on top of that, we have earnings this week. So two significant earnings, right? So you take a look at moves like what we're seeing on Google here early, taking a look at different moves in the S&P, taking a look at what's going on in bonds. We have a lot of different events affecting what's going on with yield, what's going on with individual stocks, and ultimately the indices. And then we also have, of course, what we have that's going to come out of Jerome Powell's face at the press conference. Definitely a caution day, meaning if you're going to trade, maybe focus on more conservative levels and maybe a day to be a little bit more nimble. Think about day trading to about the end of the morning session window, maybe being flat into Powell and then looking for setups in the aftermath of the press conference. I mean, these are just really timing elements to the hot zones. And again, a hot zone is any event that is scheduled, has high impact, high volatility, right? High volume. So that's high impact, right? And in the wake of that movement, perhaps we can see setups. In other words, price might close the distance to those levels we want. So we don't want to guess at which way earnings are going to go, right? Whether people were long or short Microsoft, whether folks were long or short Google, that's a really binary trade. I have no interest in playing that. However, as that information hits the NASDAQ, hits the S&P, hits the XLK, hits the XLY today, what in the wake of that, what in the aftermath can we do? So leading up into event, some neat opportunities. Don't trade during the event, and then after the event, what is it that we can focus on? And I think a lot of folks were interested in things like that with, say, Tesla, right? So let me give you an example, because this way you got a framework for what I'm talking about. Here's Tesla, right? I don't know how many folks were long going in front of Tesla, right? Generally not something I want to do. All right. Playing something right into earnings. However, let's think aftermath. Aftermath is the next 1 to 2 days, right? You give that stock 1 to 2 sessions to simmer down, let everything digest, and then ultimately hit some sort of level. For 3 days, we hit the daily price movement range, right? After a gap down, is that the day you want to buy? Probably not, right? So really, in this case, you give the large candle of unusual size after a gap, you give that thing a breather, and you start building a position on Friday the 21st. On Monday the 24th, we start moving higher out of that daily price movement range. So rather than this binary guess, and all it is a guess, gang, as far as which way earnings are going to move the market, we wait for earnings to move that symbol, and then we look to see whether or not it landed in a level that's actually a setup that's useful. So very different paradigm on earnings than most folks typically take. So I just wanted to show you all an example, and this is the kind of stuff we do in the Sector Secrets Mastery. It's the timing that makes the difference. It's not that earnings themselves are not useful, but what's the timing and therefore the trigger. Trading is timing, right? Trading is timing, and there's no multi-leg spread that's going to overcome a lack of a trigger and timing, right? So why not use all of it to your advantage? All right, by the way, if you want to learn more about this, I know some of you have already registered, and if you have, awesome, simpletrading.com/opportunity. August 2nd, 8 p.m. We're going to be having a trial through August. Definitely an immersive experience. You don't want to miss it. And oh yeah, it's $7. So if you haven't thought about, what am I going to do with summer? How am I going to prepare better for the coming fall trading season? This is it. This is the ticket. All right, gang. So let's jump into the questions. First up, green eggs and ham. Microsoft, sure. So in terms of Microsoft, let's go back to timing, shall we? So Microsoft, you can see right there, earnings Tuesday the 25th after the bell, which means really I'm not interested in Microsoft in the days leading up to that release. And you might say, well, how many days? Gang, I don't want to do anything, most definitely inside 7 days and likely in front of 14. Really not interested in putting a binary, is it going to go up or go down on earnings type play until after we get the move, right? So now, much like that Tesla example, now what can I do with Microsoft? And it's sitting at 350.95, right? If it would have moved down to 344, it would be a pretty small move, 344.20, definitely something we could do. If it moved all the way down to say 340.20 in that 2-point range, again, definitely something I could use. I don't really think there's much of a story here right now. Microsoft is generally going higher anyway. That's been the gist of the trend, as you can see with the multi-trend here, the 2 rows of colors. So it's long or nothing. It's get down into a support level. And sorry, pre-market, here we are at 339. Sorry, gang. Here we are at 339 pre-market. So the question is, what do I do with this? This is kind of that first day after Tesla's gap down. So sorry, gang. I don't have any skin in this game. So it's amazing how the brain just sort of shuts off until we have skin in the game. So I'm going to leave today's session alone. So it's a gap down. And then can we tomorrow perhaps get a setup? Again, I'm really talking exactly about the process that I shared with you in Tesla. So this was a pretty significant gap down. You give it a rest on that day, and then you look at it the next day. And that's what I would do. So again, process is what matters. Is there a repeatable thing I can share? So if we're down here on the open, 339.60, buyers and bulls are probably not all that happy. Do they dump their positions and create a little bit more weakness? I sure hope so. And that way, tomorrow becomes potentially more exhaustive. Daily price movement range, possibly the Darvis that's been sitting here the whole time. That's the low from, as you can see here, Friday the 21st at 339.83. If we can hold that area, that could be an interesting entry. Again, long and long only as well, right? So aftermath. Love the timing on the question, green eggs and ham. Aftermath, and does the aftermath land us in a zone? If it's a significant gap, larger than, say, the typical price movement range, give it a day. If not, start looking for opportunities to take advantage of, in this case, a move into support. Worth doing. And it might be really also a cool thing to do on the 1-hour chart. That might also be another cool thing to look at. So maybe we look at that in the mastery. Yeah, that might be a cool thing to look at there. All right. So again, not pre-positioned, post-position. Love the question. Thank you. All right. Next up is, what trial month includes options or focus solely on futures? Will the trial month include options? Oh, no, I don't focus solely on futures. This is not a futures, Jay, this is not a futures room trial. No, we do options on stocks and ETFs, day trade and swing trade, and I walk you through futures. So for example, if we were going to trade QQQ, if we were going to trade XLK, yesterday we traded XLK, had a great let it ride session long day trade. At the same time, we were setting up XLK options. We were setting up the NASDAQ futures as well. So we'll usually do both. And if we're doing NASDAQ futures, we might do QQQ. So yes, I do futures and options when I am day trading. All right, next up, thoughts on UPS on the 5-minute. Sure, let's jump on over there. So again, UPS is seeing some news here. Labor deal. All right. Labor deal. Oh, you had a question about J&J. Yeah, J Moss, sorry about that. Let me circle back to that question in a moment. Do I like anything on UPS? I look at that candle from yesterday, Patrick. I can't say I want to engage a market that's put in that candle, because the volatility, while interesting, may not be something I want to necessarily deal with. So I would probably pass on that and see how it opens and what the range is today. But I'll typically look at a candle like that, realize it's outside typical price movement ranges, and just maybe see something else in that IYT or XLI. But I would pass on it, Patrick, very likely. However, since you did ask, it's probably setting up more so for a buy than not. All right. Hey, let me get back up to Jay Moss's question here. Um, Johnson and Johnson. Yeah, we're in this one. We took this one yesterday as a swing. So let me walk you through that. So on Johnson and Johnson, what we did is this was kind of a pre-market thought. We were already Bot was already seeing Lorna Bot was already seeing J&J. We bought the 170 call yesterday when prices moved down to 170.10, and I'm looking at the alerts from the room. So when the price moved down to 170.10, we bought the 170 strike. We scaled out right before the close, not because that was the goal, but we hit our target. And then we're going to continue to manage the remainder of the position from break even, which we are, clearly still well above. So yes. So look, the difference between looking at it after yesterday's rally, which we profited from, and looking at it before as it dipped down into the daily price movement range, is a difference between basically momentum trading and exhaustion trading. So we are exhaustion traders in the mastery, which is to say, I'm looking to buy support, not as price moves up through resistance. I don't like the ladder style. That's just me. So yesterday's candle is one we profited from. It's not one that put Johnson & Johnson on the radar for us. It was already on the radar. Great question on Johnson & Johnson. Yeah, what do I think of the rally? I think it was a really profitable trade for the room, for sure, and we'll continue to manage it and maybe re-enter if we get another opportunity, whether that be XLV or even J&J. So thank you for that question, both Jay and Patrick. Thank you for the questions. All right, next question is, have I used or considered financial astrology as an indicator cycles? I haven't, Michael. I actually haven't. I'm a believer in cycles, though, meaning there are business cycles, debt cycles, there are all sorts of cycles. So I do believe in cycles. And if, there's all sorts of reasons that traders look for cycles, lunar cycles. And I know some folks might say astrology. Gang, remember this. If you're looking at, say, a CCI, and who created that? Wells Wilder, right? The original setting was very popularly a 20 period. That's a lunar cycle, right? So I do believe in lunar cycles, right? There are certain phenomena around that. Do I make that a primary consideration? I do not, but there are settings on some indicators, like a commodity channel index, a CCI, which is very popularly a 20 period setting, 20 or 21. That's a lunar cycle. Yeah. So I can't say I've done a lot with it though, Michael. All right. Next up. Good morning, Stephen. I was wondering if you ever use prop funding for trading. Never, Stephen. I'm not really interested in that. Not that there's anything wrong with it. I like trading my own money. I always have. I'm a retail trader. There's nothing wrong with it. I just don't know anything about it. I haven't done it. I've never been interested in it. Yeah. What are my thoughts for traders using that kind of funding? Stephen, I will tell you this. I think I don't know is a really good answer because I have no experience with it, right? So I'm sure there are some other prop traders. It's simpler. I just don't know who. And I don't even know if we've worked with a prop firm before. But anyways, yeah, I don't have any thoughts on it because I've just never done it. Yeah, but I appreciate the question. And maybe someone else in the chat can tell you, their experience with it. But no, I never have. I've never sought to do it. All right, next up. Shri asked, do I have a Discord? I do not. Shri, I don't have a Discord. I don't have a Telegram. I'm trying to think of what all the scamsters out there use pretending to be me. I will never DM you all, by the way. And I know you didn't ask about that, but Shri, a lot of folks that are using Discord, Telegram, oh my gosh, WhatsApp, pretending to be me, reaching out to folks individually. I do not do that. I don't have the time to do that. And I'm not going to solicit anyone for funds. It is probably at least once to twice a month. Someone tells me that someone solicited them and taken their money because I was going to put it into crypto and quadruple it or whatever such nonsense. And gang, I will never say that, do that, offer that. It is definitely not me. Go tell those folks to pound sand. And yes, I know there's a lot of people parading around to be me. I cannot possibly keep up with them. You can't stop them. You stop one and three more pop up in their place. So the only thing I can do is offer education. I will never DM anyone via any of those services to solicit your funds to manage, to quadruple, and whatever else these people whose mothers must be so proud of them do. Okay. But no, I do not have a Discord. All right. What is my thought on Microsoft and Meta today? So we covered Microsoft. Let's go dive into Meta, Daniel. Daniel, on Meta, once again, the earnings window is the issue. I do not want to trade overnight positions into earnings. I am not a fan of earnings. I'm not a fan of trading earnings. I wish it was like the olden days that we just got an envelope in the mail telling us how the company performed that quarter, not the spectacle that earnings has become. Just simply hate it. I know, Raghee, tell us how you really feel. However, maybe there's an opportunity to day trade it. It will depend on what the NASDAQ is doing today. It will depend also on what the XLC and even Google are doing today. Those are the connective groups. Those are the high concentration weighting groups that affect Meta. And when you look at the group, you have a much better idea of direction and potential follow through. So thank you for the question. All right, next up is yeah, I'm with you, Alex. Earnings are a coin toss, plain and simple. Yes, I do not like binary stuff. I'm not a fan of things like that at all. Yeah, I'm with you. I'm with you on that. But again, that's just my opinion. I think there are far better setups leading up into earnings in the months, if not weeks, say 1.5 to 1 month before earnings, or even 2 weeks into earnings, not that binary event right around it. I know it's exciting. I guess people like doing that, but yeah, definitely. I want my trading to be boring, right? I own worldsmostboringtrader.com, and I will do something with that. Probably a t-shirt one day. One day. All right. Next up, let's see. Matt is asking about thoughts on potential for Google's continued momentum. All right. So, what could it do from here? Matt, I have no idea. Yeah, I have no idea. And here's why I say that. Number one, I can't see the future. However, I respect where you're coming from in the question. The problem is Google on the 5-minute, Google on the 1 hour, and Google on the daily are all neutral. So there's no directional bias in Google that we had before earnings and none that we have in the wake of earnings. So what I will say is if we hit the gray area, say on the 1 hour or the daily, that's a buy zone. If we hit the gold area, that's a sell zone. If we can organize into a 5-minute uptrend, I will look to buy the dips. If we organize into a 5-minute downtrend, I'll look to sell the rips. I don't know, my friend. Would there be, we're going to open at 124, right? How much further could we go? What I would say is, remember, the backbone of every uptrend are the support levels, right? Are the places where buyers step in. That's the backbone. What gets the attention, what gets the limelight is the higher high, right? Because most of retail market participants are Momo chasers, and that's fine. That's fine, but that's what they do. So a higher high gets them in. But the backbone, the reason an uptrend remains intact, think about what a trend line is. What is it? It's the backbone of the uptrend. And what is it drawn based upon? The lows. So I would keep an eye on those lows and whether or not we're seeing as we hit a 200 propulsion or as we hit a volume ledge or whatnot. That's where I would say the overall movement higher, right? As we go higher, are buyers stepping in at those levels and offering support? Remember what buyers are. Buyers are the bid, right? Buyers are support. Buyers are demand. It's all the same thing. And if you can couple that with either volatility or volume, you're on the right track. All right, gang. As always, thank you so much for joining me for Charts and Coffee. We used the TradingView charts this morning, by the way. Love these charts. I'll see you tomorrow, same time, same station. Be good to each other, gang.